Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's webinar on of all our we have sector like healthcare sector, mining sector. We are going to cover a very important sector, that is the BRSR. And in order to tackle these two very important sector, we are having very eminent speakers, Mr. Saresh Tyagi and CA Hirak Patwaji. So on behalf of AASB of ICI, I extend my warm welcome to both the learned speakers, Saresh ji and Hirak ji. Welcome to you, sir. We are
Thank
also
you.
having with us very
Thank you.
senior member from our Chartered Accountant fraternity, C. Anil Kumar Gupta ji, as a moderator for today's webinar. So I also welcome Anil sir, and thanks to for your sparing your valuable time to moderate this webinar. I also thanks Madam Riga ji for sparing their time and to co-moderate the webinar along with C. Anil Kumar Gupta ji. Welcome to you, Riga madam. So, Honorable Chairman and Honorable Vice Chairman both are stuck up in one of the very important meeting. So that is why I am taking this liberty to start this webinar. So I request Madam Riga ji to please start for the proceedings of today's webinar. Over to you, Riga madam, please.
Thank you, sir. Hello all. Welcome to the webinar on key considerations of audit of BRSR reporting. I'm CA Riga Galodra, qualified in year 2015. I work in the capacity of manager in BSR and Co-LLP, which is a KPMG member firm in audit and assurance department. I'm working here since past 7 years. So as we all know that BRSR is a reporting framework for top 1000 listed companies which have to mandatorily disclose ESG performance from FY 22-23 onwards. Today, in this webinar, we will understand in detail the approach to BRSR core assurance, its 9 parameters, the quantitative disclosures, and other audit considerations and documentation to be kept in mind while auditing. Let me introduce our eminent speaker, CA Hirak Patwa. CA Hirak, who is an associate partner in Pricewaterhouse LLP, has over 16 years of experience in providing professional services to various sectors, both public and private. He is also a certified BRSR from ICAI and is currently working and imparting trainings and workshops on various sustainability reporting and assurance projects. He has been leading several BRSR engagements as well, which include policy creation, data template review, drafting BRSR response, etc. Now, I hand over to CA Anil Kumar Gupta, who will introduce the next speaker for today's topic. Thank you.
Thank you, Riga. I welcome all the speakers, and I'm thankful to Auditing and Assurance Board of ICI to organize such a good webinar on BRSR. Means people are not aware about BRSR, and we are talking about auditing of BRSR. I feel it is a right way to introduce the topic, and I'm thankful to Chairman and Vice Chairman in absentia for the opportunity given to me and Riga for for appointing us as moderator of this webinar. Uh, I I have gone through the profile of Sri Shailesh Tyagi, and I believe he has been instrumental in sustainability consulting only. And in Australia, New Zealand, India, he has been with Deloitte. He has been supporting the Deloitte in for the whole South Asia, in Thailand, Indonesia, Singapore, and he has a hands-on experience of this this advisory services for sustainability. That is great. I believe we are looking forward to have his great inputs. He is an expert in fugitive emissions in E&R sectors and tech-enabled ESG solution, and has led several net zero roadmap of various clients in Australia and India. He has been in TCFD scenario analysis panel. I believe we will be learning a lot from him. He is a besides being a CA, he is a weightlifter and taekwondo expert. lot of things to learn from him. I welcome uh, Sri Shailesh Tyagi to start his deliberations.
Anilji, you're always kind. No, I'm not a weightlifter. I'm a certified business trainer, and yeah, I practice martial arts since as a kid. So yeah, it's a habit. We all need to be healthy, right? But thank you for the opportunity, Hira. Good to see you here. Riga, I just sent you a LinkedIn invite. Good to see you here. Whoever. And look, Sanjeev ji, someone I touch his feet, right? He's more of a big brotherly figure, so it's always good. So very quick background, what's relevant to here? Why I'm looking forward to this presentation very quickly. One, look, half of my career, 25 years, I have led consulting and half of it assurance advisory. And in Australia, to provide these limit review and reasonable assurance under safeguarding mechanism, you have to be certified under clean energy regulator. So I have done 8,000 hours of audits, which something I think Riga would like to hear, of only non-financial. I'm still certified as a category 1, category 2 auditor, and I do a lot of work in that space, mostly around energy, right? Greenhouse gas, energy production, consumption, production, greenhouse gases. And literally, you can say I was also involved in development of BRSR assurance standard. So I raise my hand, happy to lead that group, and with Reliance, Raj and all, we started it and very well supported. So we're very keen in the world of assurance and understand this as well quite well. The non-financial. Hirak asked me financial audit questions. So non-financial, that's my world. What I'll do, I'll just share my presentation to keep everything in order. Let me know when you can see it. Can you see it? Can you see my screen?
Yes,
no.
It's visible. It's visible.
And you can see the PowerPoint?
It is there. It is there, sir. It is there.
Okay, thank you. Thanks so much. I switch off my camera so people can focus on the screen, if that's okay. And so what we have done is more around demystifying business responsibility for sustainability reporting audits. And when we look at the world of audit, of course, we are looking at both reviews, limited assurance, and we are also talking about audits, reasonable assurance. India is the only country in the world which has gone on the path of so early on whole of reasonable assurance. Select a few, do reasonable assurance. On the other hand, if you look at Europe or even other countries, it's more limited assurance. Australia only came up with reasonable assurance when they wanted to safeguard their rise in greenhouse gas emissions after the carbon tax was abolished, right? So that's where the reasonable assurance came, right? So I was at Deloitte, fortunate to sign the very first opinion for Glencore at one of the mines under reasonable assurance. So one of the first reasonable assurance opinion. So you can ask me these questions, absolutely. But what we need to focus here is essentially why there's a rise of ESG assurance and why there's a increased momentum about it. Why? Because people want transparency in action. Why we are talking about building a strong foundation from the lens of assurance and audit. Why? Because we want very strong process governance, data governance, and honestly, with greenwashing laws and penalties coming in many countries, we want to make sure there's a clear audit trail and people are not just reporting, but it's backed by strong governance, strong maker-checker mechanism. What the role of CAs and SMEs in BRSR audits? Look, I have a lot of respect for CAs because when I started this practice back at Deloitte Australia, New Zealand and Australia, I reported to Chartered Accountant, Nick Main, Deloitte Chairman, CA. And then I partnered with a guy called Paul, very good friend of mine, a Chartered Accountant, right? And a lot of respect. And I believe CAs can play a major role, not only in audits, but also in advisory, right? It's both. But let's talk about audits today. How you link this to internal audit? How internal audit is a valuable tool in BRSR assurance.
Right.
And what are some of the common pitfalls and how to avoid them? Currently, I've been involved a lot in assurance, more as an SME, of course.
Good.
And I'm realizing very clearly that there are challenges companies have moving from limited to reasonable, right? The SOPs and all that. And what's the way forward? So with that, let's look at the first agenda item, transparency in action. So why ESG reporting is gaining momentum, right? You need subject matter and you need a report, and then you go for assurance. So when you look at the momentum of or the momentum behind ESG reporting is primarily driven by regulatory mandates, investor, customer demands, and there's a need to mitigate litigation and reputational risks. When you embrace ESG reporting, companies are bound to look at their ESG actions from the lens of transparency, how they can use it to build trust with their stakeholders. And so I will use the word stakeholders, not only shareholders, right? Stakeholder activism, stakeholder agenda, whole value chain, operational chain, and ultimately improve their overall performance and sustainability. It's all about making sustainability work for their own business, and then businesses work for sustainability. That's absolutely what they are looking at. And this shift, what are the key drivers behind this shift in understanding, right? It's a two-way street, as I explained. The regulatory landscape has been evolving rapidly. We all know that. We have seen what SEBI is doing. Not only here, the stock exchanges, the regulators around the world are mandating disclosures, and they're also looking at linking to risk and performance. Investor pressure is real, right? ESG ratings, the black box of ESG rating. I wrote a piece on ESG rating and Google it. I partnered with a Melbourne professor, and we both spent a lot of time on it. It's published in Journal of Wealth Management. The ESG ratings play a significant role as well, right? Institutional investors, asset managers are integrating ESG factors. We all know that into the investment decision making already. And nowadays, it's gaining more momentum. And trust me, at Bloomberg, analysts sitting in, say, any country in Europe, say Australia, because I know one in Australia, he must be looking at your company's report. You don't want to, but he is, because it's public domain. Any interview you have given, anything you have related to sustainability, they are looking at it. And how they define sustainability, very quickly. Sustainability is not a word which is good to have. It's not about one environmental parameter. It's not about planting trees. It's not about reducing greenhouse gas emission only. Honestly, please understand from your world of capitals, the financial capital is very well understood, right? We have annual report. But how you can really manage financial capital and create value is by keeping your employees happy, retention, right? Attraction, training, mental health and well-being, growth, better working practices, safety. How you can really be successful in relationship with your suppliers, with your investors, with your regulators, right? Across the value chain, social capital. So social capital, human capital, financial capital. And then, of course, you consume natural resources. You want to manage your impact around natural resources. You want to manage positive impact. You want to manage negative impact. You want to have both. But it's all about managing the impact, right? Creating value out of that impact, circular economy. And you go on that path. You go with that lens of capitals. And I'm not talking about integrated reporting, 6 capitals, ISSB, SASB, moving into IFRS, S1, S2. No, I'm talking about commonsensical work. If I want to run a business, let's look at this very quickly. Let's look at this particular presentation. What's happening here? So money is being involved, of course, because that's investment, right? That's basically investment has gone, goes without saying. People, us. I would not have come to you if I didn't have, Dr. Singhal would not have, recommended my name, or Anilji would not have contacted me. It's a relationship. And then it comes down to creating the impact. I didn't take a flight. It's online, right? So yeah, so think from that angle. That's sustainability, what we are talking about. And that's where customer demands cannot be ignored. Customers are asking for products and services that align to their values and beliefs. If you Google Deloitte Millennial Survey, and it's nothing because I work at Deloitte, but that's very close to my heart. See what Gen Z and Gen Y, this has been happening for 13 years now. We do extensive survey. What's their belief on sustainability? I would like you to understand. And their shift in terms of driving companies to adopt and report on ESG criteria. And finally, litigation and reputational risk. Absolutely. I've seen enough enough of these, with companies not staying true to what they have promised, right? And stakeholder activism, right? In energy and resources, plenty of examples in banking and FSI as well on conduct. You can check numerous examples globally. And in the past, of course, pollution, labor violation. When I was a student 25 years ago, it was all about pollution, labor, but now it's much more. And finally, ESG disclosure is literally at the heart of this overall momentum. Because if you can't disclose, if you can't convey, you can't control the narrative. So ESG disclosures being public through these responses to questionnaires of rating agencies like Carbon Disclosure Project. These questionnaires, if you look at rating agencies, would be Dow Jones Sustainability Indices, MASCI, Morgan Stanley Composite Index. All these companies rate companies based on their ESG performance. And these ratings, EcoVadis, like suppliers, right? It really helps investors. They use them to make informed investment decisions. So that's what we are talking about here on this slide. When we look at unified audit and assurance strategies for robust ESG reporting, right? What are we talking about? What we are talking about here, if you look at, is essentially the expertise of CAs like you in financial accounting and auditing firms, how you build this solid foundation and help in ensuring transparency and reliability of these disclosures. So you play a key part in that. How you focus? You focus on key specific ESG areas. You enhance the ability of that company and yours to by analyzing non-financial data. You bring in, and what the work this forum is doing, bringing evolving standards, staying abreast to what's happening globally. And that's where CAs can play a very significant role in robust ESG reporting. Now, what's the difference between audit and assurance, right? And you, of course, you all know. But let's look at it very quickly. If you look at the difference in the world of reporting, audit involves a detailed examination of specific areas, right? Most commonly, a company's financial statements. That's something you guys are used to. From my lens, audits are essential for verifying the financial data that underpins ESG disclosure. Your role becomes very key, ensuring they're accurate and comply with standards. So go from that lens. When you look at assurance, assurance involves analyzing and assessing processes, operations, and procedures to verify the accounting of key performance indicators, right? And that's from your world. From my lens, assurance provides an additional layer of validation, focusing on non-financial data, such as environmental metrics, social metrics, and they ensure these are reliable and robust. CAs bring essential skills to both audits and assurance, right? The in-depth knowledge of financial accounting and auditing standards, internal controls, risk assessment. However, to effectively contribute to assurance engagements, CAs can develop, and they should develop, an understanding of ESG frameworks. Absolutely important. Data collection methods and relevant standards from the non-financial world. They must stay abreast with evolving assurance requirements. For example, Global Reporting Initiative Standard, business responsibility for sustainability reporting, and these rating agencies and their requirements I talked about, BRSR, CDP and DJSI, right? Now, when you look at the key frameworks, right? When you look at those, please understand the world of frameworks, voluntary frameworks, guiding documents, and standards is turning into interoperable. It's turning into something called interoperable. Means if you look at BRSR, it's an interoperable standard. It's fully, it's being developed based on various standards, SASB, ISO 26000 on social, UNGC, TCFT, right? And then I was in Sri Lanka recently, right? And I do a lot of work in that part of the world as well. And there, every client I'm meeting, they talk about IFRS S1 and S2, right? How IFRS is coming towards sustainability and climate change disclosures, how you're moving in that direction, right? So that's where it is. But if you look at these frameworks very quickly on this slide, the key frameworks and standards that have guided BRSR, we're talking about BRSR, right? Or business responsibility and sustainability reporting, right? The BRSR reporting has created synergies with global reporting standards. They're emphasizing transparent disclosures. They're aligning with internationally recognized frameworks. It's absolutely crucial as it helps companies meet the expectation not only regulatory bodies, but stakeholders, right? Various stakeholders. And BRSR framework integrates interoperable, as I mentioned, several globally recognized standards. Climate Disclosure Standards Board, Task Force on Climate-Related Financial Disclosure, Sustainability Accounting Standards Board, Global Reporting Initiative, International Integrated Reporting Council, right? And these frameworks will guide companies not only in the disclosure of ESG practices, but also risks, performance, quite comprehensively and transparently. Absolutely. The structure of BRSR, and we talked a little bit about 1,000 listed companies and all. It's a gliding scale. But a disclosure is very much aligned to what I've seen over the years globally. There's a section A, which is general disclosure. There's a section B, which talks about management and process disclosures. Section C, there are 9 principles, and they're further divided into mandatory and voluntary, as you see on the page. 106 essential, the 10 leadership. The first general disclosure is, as the name suggests, is all about disclosure question related to general information about the listed entity. Section B focus on policy, management processes, governance, leadership, oversight, and it emphasizes the importance of a strong governance framework and effective management processes, how you can achieve sustainable business outcomes. That's exactly what it is. And Section C, essentially, there are 9 principles. As I said, they're further divided, but what they cover is a wide range of KPIs, ensuring that companies report on these metrics comprehensively. And it gives them a chance, right? Essential is fine. You want to choose some of the leadership, please do, because they may be relevant to you. So please do. So that's an amazing way of doing things. And that's just brilliant effort by SEBI on this. What it does actually, this ensures the reliability and credibility of the reported data, goes without saying. BRSR reporting adheres to assurance standards like ISA 3000, SSA 3000, which I was involved, ASA 3000 in Australia, where I was involved, how you really look into these things. And these standards provide a framework for verifying the accuracy, completeness of non-financial information, including repeatability, right? And how you enhance stakeholder confidence in ESG disclosures. That's exactly what we are talking about. Now, how you navigate the BRSR landscape, right? Look, BRSR core has literally elevated accountability by mandating detailed reporting on ESG. It was published very quickly. It was published by SEBI in May 2021. I remember landing in India. I live overseas. I live in Sydney. Family is there. I remember clearly 16 Feb 2021, and it came after that. The BRSR core represents a subset of the comprehensive BRSR. Again, I'm repeating, BRSR core is very important for you to know because it represents a subset of the comprehensive BRSR with new ESG metrics for mandatory disclosure. And they came in effect on July 2023, right? Almost a year after, or 2 years after, last year, basically. I said glide path. There's a glide path for BRSR core. This ensures phased implementation, starting with the top 150 listed companies in FY 2024, right? It's being extended to the top 1,000 listed entities by FY 26-27. For value chain disclosure, a comply or explain basis is introduced, which I've seen with SX and various stock exchanges all over the world. You please either comply or you explain, because value chain data, getting it is a challenge. But if you want to be net zero as an example, just one example, that's a topic for some other day. You want to have your value chain data as well. You need to. Oil and gas, 90% of emissions are outside your value chain. How will you achieve net zero if you don't have a handle on that data, right? So that kind of data we are talking about. And to comply with BRSR course assurance requirements, my give and take, I do a lot of work around it. The companies must develop standard operating procedures. They should have a comprehensive ESG management system comprising of information system for data management across all the 22 key performance indicators. They should make sure that they ensure the independence of audit firms. Very important. Very important. It shouldn't happen that someone has developed a report and absolutely important. They should identify assurance standards, confirm the firm's and auditors' ability to issue reasonable assurance. Very important, right? And this is something no one understands better than you. That's the areas I have covered. Now, SBI has mandated listed firms to report specific value chain data, right? As per BRSR core, a new format. Now, FY 24-25 onwards, companies will require to disclose 22 KPIs under 9 BRSR core parameters, right? As you see, okay, on their value chain. And then they were going for limited assurance being required on the same for FY 25-26. Trust me, that's absolutely key for companies. Very, very important. These parameters honestly includes the obvious, right? If I would go to a company, first question I ask, hey, how are you performing on greenhouse gas emissions? What's your water footprint? What's your energy footprint? How you're looking at health and safety? How you're enhancing that for your employees, the well-being, and how you are looking at gender diversity and more. Very important. And gender diversity. I mean, when I took charge here, for my practice, I took the charge from 15 to 50%, right? So what companies are doing on that? Show us. But then, additionally, the BRSR new format also introduces 9 questions as part of their BRSR disclosure, focusing on essential indicators like grievance redressal, policy coverage. It also will look at the leadership indicators such as, say, capacity building, stat compliance, right? Employee well-being, environmental and social impact. So what is this impact? Very quickly. You look at any value creation framework, right? In my previous life, I was involved in Reliance Sustainability Report, literally for 3 years in a row. And one thing I really, if you click on that report, which I led that work, it was very close to my heart. If you see, you will see an input, enabler, outcomes, and impact model. And absolutely important, right? So companies need to look at those impacts. Very important. So, and then, however, please remember the questions I just mentioned are not required to be assured. So that's what it is. Moving on to the next slide. Now let's navigate the BRSR landscape in terms of, say, let's look at the regulatory influence, recent shifts, future direction, right? So look, in the pipeline, we have the phased rollout of BRSR for all listed companies. That's what it is, right? SAB has mandated. Just very quickly, because I'm keen to also cover and otherwise even before, I don't want, I want Hirak to get time, right? So just 1 second, allow me, please. Yeah, so I think that's okay. So in terms of moving on, so if we navigate the BRSR landscape and we look at the regulatory influence, recent updates and shifts, and where the future is going, in the pipeline, we have the phased rollout of BRSR for all listed companies, right? Indirectly affecting unlisted companies through value chain disclosure. So that's one. Second, SEBI is developing a BRSR core-based ESG rating system to streamline ESG ratings. And compliance carbon markets are being introduced as well. And it's being transitioned. Basically what they're doing, they're transitioning the existing PAT mechanism into emission trading. So something for you to know, a lot of work happening on the carbon market side as well. Rating scale, they're coming up. And of course, the core-based rating system. Looking ahead, we can absolutely expect sector-specific BRSR guidelines. This is I've seen all over the world. When I talk to companies, they say, hey, hey, ST, people call me ST. Hey, ST, we don't see this. We don't have enough guidance for my sector. I'm like, okay, so absolutely. And you will also see integration of green credits and other KPIs to extend BRSR coverage. Basically, you will see an increase in core parameters. And I won't be surprised if you see the introduction of a social stock exchange for benchmarking and comparing performance. Absolutely. Now, I mean, if you look at this slide, overview of ESG assurance, right? It's always good to go back to the basics. According to ISA 3000, the revised one, there are 2 types of assurance engagement, right? It definitely falls into your sweet spot, right? Limited assurance, reasonable assurance. Limited assurance involves the auditor having a limited awareness, significant changes applied, relies heavily on management rep as information source. Whereas reasonable assurance offers a high but not absolute level of confidence. It involves asserting substantial accuracy in reported information, right? Now, limited assurance provides a less detailed understanding of processes and controls with limited examination of source data, as it includes fewer control tests, right? And as a narrow testing scope and evaluations based on constrained, relevant and adequate evidence, right? That's the approach. Now, when we go into reasonable assurance, of course, the game changes because you're looking at a deeper understanding of these internal procedures and checks. You're looking at extensive testing. You're looking at control testing. You're looking at data validation. You're looking at assessment of assumptions, fundamental assumptions and methodologies. Because it's a holistic approach, right, of collecting relevant and suitable evidence. And it also includes a risk assessment and actions based approach to mitigate identified risk, right? Right. Now, when we frame this, a typical framing of a limited assurance statement is negative, right? Based on the procedures conducted, nothing has come to our attention to suggest a material misstatement um, in the management assertion regarding, say, XYZ, right? On the other hand, a typical framing of a reasonable assurance statement is affirmative, right? So how will I write? For example, based on the procedures conducted, if you compare to, say, assurance statement, right, limited assurance statement, I would say, we believe that the management assertion XYZ is reasonably present, right? So I just want to very quickly get this out of the way. Having said that, I have a question for you. I know you're going to ask me questions at the end of it. You can ask both Hirak and me. One question. A company getting limited assurance, can that company also get reasonable assurance? That's my question for you. I would like to hear the answer at the end of it, please. That's why I covered that slide. Now, when you look at the landscape, evolving landscape, while we have already established the need for assurance, right? We have. Let's now delve deeper into why it is becoming increasingly crucial for companies as we explore the evolving landscape of ESG assurance. For example, enhancing data reliability and comparability across different reporting periods and entities. Think about reducing greenwashing risk. Think about helping companies mitigate the risk which comes with companies exaggerating their ESG performance. Can happen, not consciously. I'm not even going on that direction. Imagine lack of understanding of ESG framework intervention for your sectors, and you take tall targets and you realize, one, you can't achieve them, or they were not even relevant. Think from that lens. Enough of examples. Just type greenwashing penalties all over the world. I know a few companies in Australia as an example. Happens, right? And it's happening. So how you increase your investor confidence and build trust via sharing verified and credible ESG information. That's what you're looking at. How you're aligning your financial reporting practices to ensure a holistic view of a company's performance from the lens I explained around 4 capitals, right? As one example. Now, talking about some new developments with respect to ESG assurance. First off, let's talk about what IAASB is doing. That is International Auditing and Assurance Standards Board. They're developing specific standards for sustainability assurance. Their project aims to create an overarching standard for assurance on sustainability reporting, and they're addressing the challenge of ESG assurance. Then there's an adaptation of existing standards like ISA 3000 revised. That have been the primary standard, right? And that's used for ESG assurance engagement. It's being adapted to better fit sustainability specific needs. It's focusing on materiality assessment, which you all know, evidence gathering, reporting in ESG context. That's essentially it's doing. And last but not the least, there's an ESG specific guidelines being developed to address challenges like data quality, measurement methodologies, and the scope of assurance, such as supplementary guidance notes for BRSR. Now, GRI is also coming up with sector-specific standards, which will also help streamline material topics relevant to specific sectors. Think about BRSR interoperable standard, and then GRI coming up with relevant sector-specific, right? So that's a link. When we look at evolving landscape continuing, when you look at that, please understand, when we talk about International Sustainability Standards Board, ISSB in assurance, as you see on the slide, global baseline for sustainability disclosure. They're coming up with IFRS sustainability disclosure standards, as I may have mentioned at the start of my presentation. It's aimed at creating a comprehensive global baseline for sustainability-related financial disclosure. These standards focus on providing investor-relevant sustainability information. Think about BRSR report, think about providing assurance, and think about IFRS development. What is the potential impact on assurance practices? Number one, standardization of disclosure will happen. That will facilitate more consistent assurance approaches. That definitely would lead to the development of specific assurance procedures aligned with ISSB standards. It will enhance the comparability of assurance reports across various geographies. Finally, collaboration between assurance standard setters. ISSB is collaborating with IAASB and other assurance standard setters to make sure that there's an alignment between reporting standards and assurance practices. This collaboration, look, their aim is to develop, honestly, is to come up with an integrated framework that covers both reporting and assurance aspects. And that would be brilliant. Now, when you look at continuing in the same vein, Now, this slide honestly highlights the global regulatory trends driving the mandatory ESG assurance. So for example, you will hear a lot of these things. I thought I very quickly cover all of them so that you know, and this presentation I'm happy to share as well. Think about this slide outlines key regulations across various regions. It emphasizes the growing trend towards mandatory assurance. Look at CSRD, corporate social corporate sustainability reporting directive. Sorry, CSRD. Yes, um, it's in Europe. It requires limited assurance of sustainability information with a potential future move to reasonable assurance. Similar in the US, SEC climate disclosure proposed rules for public companies would require assurance on scope 1 and scope 2 greenhouse gas emission. Very quickly, you may have heard this scope 1, 2, 3 many times, sometimes wrongly use it for value chain in terms of ESG, not really. So I very quickly will tell you this and just you'll remember it for life. Easy. Sustainability is out of the way. What is sustainability? Let's cover this very quickly. Imagine I own a thermal fired power plant, right? I buy coal and I burn it to generate power. The coal I buy and burn is scope 1 emission, greenhouse gas emission, because I have bought the carbon intensive fuel and burnt it. Scope 2, I take energy from the common grid. I'm not generating directly, I'm using it. Scope 2. I go to that thermal fired power plant to audit as an auditor. Scope 3, right? Because I've taken it for the job and I can attribute. Scope 4, I came up with a product which reduces emissions across the life cycle of its scope. So anyway, these terms will keep coming to you. I thought I'll very quickly cover. Now, Singapore, I've done some work there. The Singapore SGX Stock Exchange sustainability reporting rules are for the listed companies, and they have to report on comply on explain basis for external assurance. And this has been in Australia as well, right, for a while. Now, other countries, including South Africa, my home country, Australia, Canada, and others, they all are considering and implementing mandatory assurance requirements to enhance the reliability of ESG information. So what we are talking about in India is coming there, right? Now, when we look at INGA, and I thought I'll cover this, and it's very key, right? A lot of people ask me, hey, why you help people or so confidently on reasonable assurance? Because under these schemes, I have already done enough work for years now, more than 15 years, providing assurance to companies, most complex companies in the world. Think about an underground coal mine, roadways, fugitive emissions, right? Surface to in-seam, underground to in-seam, ventilation air methane, and how you maintain accuracy, repeatability, reliability of that data, right? Think forever, and directors are liable under the determination and regulation. That's what we are talking about. And look at this scheme. This serves as an excellent example of how sector-specific and activity-based regulation can drive the adoption of high-level assurance practice ESG reporting. In Australia, INGA came. INGA, I call it INGA. They call it INGA, but it's NGER. This was introduced by the Australian government in 2007. It was on data and accounting related to greenhouse gas emission, energy production, energy consumption for some covered entities, generally large corporations. INGA reasonable assurance requirement aligns with global trends towards more rigorous verification of climate-related disclosure, which we have been discussing, and is typically conducted in accordance with NGR audit determination and relevant Australian auditing standards, right? ASA 3000 as an example. Now, why I covered this? I covered this because, trust me, this was a humongous exercise for companies. Think about sector-specific guidance, which is very much in detail for every single mining and metals company, oil and gas company, sector-specific guidelines. Every company using it to report on carbon tax, money element is linked to it, so the data has to be of high quality, strong process and data governance, right? Certified auditors, accountants, experts, engineers, all have to be certified, and once they are certified, and it's not a easy thing to get that certification at the category 2 auditor, you go in and you provide assurance, right? That's the world we are talking about. And once you get into that path, right, honestly, this is the future. The past is the future, as someone's commented, you know, on one of my presentations. This is the past, but this is the future for us. And that's where it's going. Last thing, in this, I'll move on to the slide, next slide. Trust me, under this, if you see ACAR, Australian Coal Association, I partnered with them and helped the clean energy regulator come up with guidance document for fugitive emission metals in mining. Humongous exercise, very difficult. So I was a subject matter expert on that. So sky's the limit in this field where you guys are absolutely needed. Now, safeguarding mechanism came into existence, and this is where I tell you the next step after that. It was a critical component of Australia's strategy to reduce emissions at its largest industrial facilities. Now, this mechanism is a classic example of how specific regulatory framework can enforce, number one, stringent emission controls, pushing industries towards more sustainable practices, setting up clear baselines, offering flexible compliance options, basically safeguard mechanism, and how to balance environmental goals with economic realities, making it real. How you drive progress towards the country's ambitious climate targets, because every country has an NDC commitment. We won't go above this, right? Above this limit put on us, or the target we have taken, commitment we have taken. So, what it is very quickly, so that you know, because there's a lot to learn from this scheme. One, safeguarding mechanism is their policy to reduce emissions at the country's largest industrial facility. As I explained, it's a regulatory framework, part of a regulatory framework. We need to remember. It sets legislative limits known as baselines on the greenhouse gas emission of these facilities. These limits will decline predictably and gradually over time. That's the way it has been set up. And it will help the Australia achieve its emission reduction target of 43% from memory below 2005 levels, right? I think it's by 2030. And the country is going towards net zero by 2050, like we are going towards 2070. Same. It's failed to comply with the safeguarding mechanism, result in financial penalties. That's the level we are talking about. The incentive, if you ask me, the mechanism, if you ask me, is designed as an incentivized cost-effective event. Anyway, so it has a very strong reasonable assurance component. That's what I'll cover. Now, this word of greenwashing will come to, because at the end, when we provide assurance, we are looking at strong process and data governance, accuracy, reliability, repeatability, strong SOPs. Why? Let's look at these examples you may already know, right? There's a crucial link between robust ESG reporting and preventing greenwashing through a case study, right? If you look at it from that lens. That's what it is, Volkswagen Diesel. I'm not going to read it, but essentially what happened, you may already know. I'll skip this. It's there. You can read in the interest of time. But let's talk about how robust ESG assurance could have potentially helped avoid this situation. I think I'm more interested in that. Deeper testing procedures, understanding software dependencies, scenario planning and risk assessment, the world you know. If they would have gone beyond standard test and incorporated randomized testing to detect discrepancies, would have helped. If they would have ensured a thorough understanding of how software interacts with other engine components and sensors, I'm a mechatronics engineer myself, how you use that, this might have revealed the manipulation, right? So auditors and experts, ESG experts joining hands and doing this, right? And how you are considering various risk scenarios, including, say, potential manipulation of test results, how you are going for a more in-depth assessment of the manufacturer's internal controls, and also looking at potential vulnerabilities. Trust me, for me, this scandal highlights the critical role of robust ESG assurance in preventing greenwashing. Assurance providers have to exercise additional scrutiny. They must. And especially when a company may or may not have a history in terms of how these practices were handled. I'm not talking about Volkswagen, right? This one-off doesn't define a company. But yes, we can help the company. That's the interest, right? All right. So when we look at the next, and I'll go very quick now. Assurance ready is not about having the data, right? That's not what we are talking about. We are talking about, we ensure that the data is backed by a robust and endorsed process that can withstand public scrutiny. This requires frequent internal reviews, a clear governance structure. That's what I've depicted in this slide. The governance framework is the backbone, right, of being assurance ready. And Hirak will cover this, I'm sure. I mean, that's his word, right? But trust me, for me, achieving corporate ESG goals through this is absolutely important. Now, when we talk about the data, getting ESG data right is crucial. Getting it right for building a strong foundation. And there has to be a systemic approach across processes and control mechanisms. This is where data governance plays a pivotal role. Effective data governance will involve a comprehensive approach, right? You define metrics, establish internal controls, implement robust processes, maintain a clear scope of reporting, and of course, you define roles and responsibilities, right? That's the slide it covers. Now when we look at roles of CAs and SMEs, right, in BRSR assurance, how you are enhancing assurance quality through professional judgment and collaboration, very much your world, right? Now, CAs and SMEs Number one, in my opinion, they should collaborate and work closely. Trust me, I have seen SMEs doing assurance and not really understanding the A of audit. And I have seen auditors doing audit and asking silly questions, right? Which they can avoid. How they can collaborate. Number one, they bring their unique expertise to ensure comprehensive and accurate ESG assurance. They sometimes lead individually, but they support each other. That's what we are seeing, right? They're enhancing the quality of the assurance process. Now, here is how their professional judgment plays out across different areas, right? If you look at this slide. One, triangulation of non-financial data by SMEs. That's one. SMEs, they apply professional judgment to non-financial data, such as gas refilling benchmarks, right? Emission test reports, data extrapolation, applicability of certain KPIs. They will assess the suitability of these assumptions, analyze the operations, say waste disposal and physical output in terms of intensity, right? Then they will verify financial numbers, right? You come in, the CAs come in, they say, okay, let me look at the financial metrics such as number of days of accounts payable and the percentage of procurement from within India and ensure these figures are accurate and aligned with non-financial data. Think about that. Think about suitability of approaches applied. The SMEs will come in, they primarily evaluate the suitability of the approaches used in the audit process with support from CAs, very important, with support from the CAs. This includes reviewing methodologies, validating assumptions to ensure they're appropriate and reliable. Now, CAs detect material misstatements with support from SMEs. So they take the lead and they bring the SMEs. For example, CAs design audit procedures, right? Tailored to, say, greenhouse gas data. Test internal controls, emphasize the interconnectedness between financial and non-financial reporting. On the other hand, SMEs, they provide the necessary industry-specific insights to support this process. Now, this is the synergy I'm talking about between CAs. They find the role of CAs, not thinking sustainability is something I don't understand, and SMEs, absolutely crucial for high-quality BRSR assurance. If they leverage their complementary skills, they ensure comprehensive and accurate ESG reporting, and that's where they meet the high standards expected by stakeholders. Absolutely important. Now, role of internal audit, right? When we look at the role of internal audit, absolutely important. Absolutely important in terms of data inaccuracy, right? So what is the role? They play a key role in ongoing reviews, ensure internal controls are effective. The process supports external assurance efforts, ensures that the organization always assurance ready, right? Absolutely. For example, manufacturing company might audit its emission data quarterly, right? To ensure compliance with environmental regulation. Absolutely important when we go into assurance. But what could go wrong without internal audits? If the company did not conduct these internal audits, what are some of the issues may arise? Data accuracy. Error or misstatements in emission data might go unnoticed, leading to incorrect reporting at the end of the year. Operational inefficiency. If you look at these inefficiencies, this inefficient process remain unaddressed, lead to higher operational cost and missed improvement opportunities, goes without saying. Anyway, so same way, insufficiency of relevant benchmarks for emission calculation. You don't have the benchmark, right? You don't have the most accurate or up-to-date benchmarks for calculating emission, right? That will also lead to significant errors. Now, lack of department accountability, over-reliance on third parties. Absolutely, I've seen it so many times. Without regular internal audit, department may not be held accountable for their ESG data and processes. What it will do, this will lead to an over-reliance on third-party data or external assurances, which may not always align with the company's specific needs or standards. And this dependency can result in less control of data accuracy, potential compliance issues, and inability to quickly address discrepancies or errors, right? Identified, say, external parties. Now, this is something I'll take 10 seconds on this. The audit committee plays an important role in keeping an oversight on the periodic internal audit by establishing a clear charter, scope, and plan for annual cycle activities related to ESG reporting throughout the year. Now, when we do that, what are some of the issues and challenges, right? Very, very important. Now, when we look at some of the challenges, implementing this assurance comes with various challenges, both external and internal, right? Externally, there's a lack of standardized definition, missing sector-specific materiality indicators, which we talked about. What's coming, what may come, and that's we don't have. That's why it may come. Insufficient benchmarks tailored to our country, Indian context, right? Internally, organizations face issues like systems and procedures. that are not fit for purpose, a significant ESG expertise gap, which I clearly see in India, a lack of formalized processes, and over-reliance on third-party data, right? Addressing these challenges requires coordinated effort to improve data accuracy, enhance expertise, establish robust processes. That's where the role of CA is coming. Absolutely. Let's see a case study very quickly, right? So that I put a lot of things I've covered, but let's see very quickly. Now, with this case study, if you see, this case study examine or highlights challenges in linking ESG data to financial statements. In this scenario, it's about a retail company. Imagine preparing its financial statements. It faced two key issues, including provisions for future expenses like electricity and cab hire that haven't been incurred yet, and listing assets that haven't been purchased as provisional assets. Think that. Now, these practices can distort the financial picture by overstating liabilities and assets, right? The assurance provider addresses these challenges by assessing the rationale for provisions. It will recommend reclassification of uncertain expenses, right? Uncertain expenses as contingent liabilities. For provisional assets, they verify purchase commitments. They adjust the accounting treatments if no firm commitment exists, I'm assuming, and suggest proper disclosure of significant purchase intentions in the notes to the financial statements. This ensures the financial statements accurately reflect the company's true financial health, right? That's one case study. Let's look at very quickly another one. Now, this case study focuses on the challenges in ensuring the completeness of ESG reporting. This is very important, the completeness. So imagine we're looking at BFSI sector here, a multinational bank with a vast network of branches across different countries is committed to sustainability reporting. However, they struggle to capture sustainability data comprehensively from all branches. Why possible? It leads to an incomplete picture of their environmental and social footprint and impact, right? The assurance provider, my job, if I go in, or your job, go as an auditor, is to address this by developing a boundary setting framework based on financial data analysis, right? As a CA, you go and look at the financial data, you analyze it, and then you ensure transparency is reflected in the sustainability disclosures. It's all about implementing data verification procedures, and you're going to review invoices and supporting documentation, and then you're going to assess bank's internal controls over data collection, right? And reporting. And that's where you look at potential weaknesses, basically. And you're going to leverage financial data such as utility and waste disposal bills. You look at those bills. You look at standardize and categorize expense by location and environmental impact. And this aggregation and analysis of data will identify significant outliers or inconsistencies I'm talking about between branches. That's where it will guide your further investigation into potential data gaps or missing information, right? This is the approach which will ensure a comprehensive and accurate picture of that particular multinational bank's sustainability performance, right? This is the level what we are talking about, and this will signify your role, why it becomes important. This one I'll cover in 10 seconds. Literally, this is more about consistent reporting practices, right? Last was about completeness across years and locations for a multi-sector conglomerate. Think, now this organization will face challenges due to varying accounting policies, right? Inconsistent data collection methods, lack of standardization, lack of dovetailing between practices. So different business unit might interpret accounting standards differently. That may lead to inconsistencies in revenue, expenses, profits, measurements, quite possible. Now, data collection methods for key metrics may vary, right? Now, a lack of standardized definition for these reporting KPIs will make your job very difficult. How are you going to compare performance accurately? So we, as assurance provider, can help them by developing standardized accounting policies and methodologies. We can help them implement a centralized reporting system for data collection and aggregation. We can provide them training to ensure consistent application across all units. We can also perform comparative analysis to identify and address inconsistencies over time and guide clear documentation and disclosure practices. Essentially, the holistic approach will help that large conglomerate, achieve consistent and reliable reporting. This will allow for accurate performance comparison, transparency in their financial statements and annual reports. See the relationship. I'm covering all of financial and sustainability. I'll skip this because I was just want to pass on. But honestly, this is about overestimation in ESG reporting. This is a leading e-commerce company and how they use the spend-based method to report scope 2 emissions, right? So that's what it is. And assurance provider will go in He'll review the company's spend-based methods, look at overestimation, and this will really help the company with accurate reporting and reliable, right? I'm talking about sub-metering, activity-based allocation, and all that, right? But I'll rush now. I'll just cover this slide quickly. Now, India, way forward, very quickly. I'm finishing now, these last two slides. India is poised to play a significant role in the global movement towards sustainable and responsible business practices, right? Trust me. There's a reason my home is Sydney and I'm working in India. Quite proud to work in India. Quite proud, and I'm not going anywhere. Why? Because there's so much work happening. Upcoming regulation, including development of BRSR-based ESG rating system, as I explained, the rollout of BRSR core to all companies, introduction of compliance carbon markets, right? I'm just summing up. We all can expect introduction of a carbon tax in line with the global practices, increasing core parameters of BRSR, implementation of an umbrella ESG policy for sustainable finance. And I talked about stock exchange, social stock exchange, right? Now, to sum up, last slide, there are some of the key takeaways on the audit of BRSR. BRSR allows accountants, talk about CAs, to go beyond traditional rules. It helps in assessing ESG performance and stakeholder value. This paves the way for integrating non-financial impacts into future accounting. With accountants, the key is data management and accuracy, right? Companies need to enhance internal systems and controls we talked about, right? For sustainability reporting, matching financial reporting rigor, absolutely important in this world. Continual industry feedback is essential for ongoing improvement. Very important. The communication, these feedback, these papers need to keep coming, right? Consulting documents which keep coming, consultative documents. And finally, the assurance of value chain providers, as per SEBI circular, you may have seen, will enhance transparency and accountability in corporate sustainability practices, right? That's it. That's last slide. I'll just stop sharing and just 1 second, sorry. Thanks so much for the opportunity, and I'll take the questions here. You are my accountant friend, right? You live and breathe this as an auditor. Passing on to you. Thanks so much.
Thank you, Shailesh. Thanks for setting the context and kind of explaining the BRSR basis, starting with various frameworks, global and local, and what are the key updates happening in India, outside India as well. Let me put up my presentation. Just tell me when you can see the same. Is it visible?
Yeah, it is visible.
Yes, it is.
Okay, sure. Thanks. So what we'll be capturing as a next 45-50 minutes is starting with assurance standards. Some of stuff would already covered by Shailesh, so I skipped those stuff. Then we'll go to BRSR core audit and take brief about what SEBI circular says on BRSR core audit. And we do deep dive into assurance approach, what methodology that one should follow, what are the things that one should take care of while doing a BRSR core audit, and then go to a Q&A sessions after that. To start with assurance standards. So as discussed earlier, there are two assurance standards which are applicable globally. First is ISA 3000, which is revised in 2013, issued by IAASB. This standard typically talks about historical financial information, audit or review of financial information. It sets up basic principles and procedures on how to conduct non-financial assurance audits. So that typically lays the foundation of any BRSR audit engagements. On the right hand side, if you see ISA 3410, so ISA 3410, it specifically addresses the assurance on greenhouse gas emissions. So it provides a foundation on how to audit greenhouse gas emissions, provides specific audit methodologies to carry out audit of greenhouse gas emissions. Having said that, when there is an assurance report that the practitioner needs to issue, they should use both the standards. ISA 3000 is a base standard under which the assurance is required to be carried out, and 3410 is specific for greenhouse gas emissions. So that's a brief about what's there in international standard. When we move to India, so it's kind of heartening to see that Sustainability Assurance Standard Board has issued two standards. First is SSA 3000 and next is on SA 3410. Again, SA 3000 is an umbrella standard which is applicable for all assurance engagements on sustainability information. And this standard was issued by Sustainability Reporting Standard Board of ICAI in January 23. It was voluntary till March 23. However, SSA 3000 is mandatory for the chartered accountants to use these standards for sustainability related information for the reporting period, which is ending on March 31st, 2024. Similar to IAASB, ICAI has also issued 3410 standard, which typically talks about practitioners' responsibility in identifying risk of material misstatement, specifically focusing on greenhouse gas emissions. It specifically deals on GHG statement, which is kind of prepared by the clients, companies, and how to do an assurance on the GHG data being reported. Again, it's also mandatory to apply SA 3410 for assurance report, which is covering for the period ending 31st March 2024. So these are typical two standard. One is an international one and another is a local one. Next, briefly covered by Shailesh on limited versus reasonable. Yes, limited assurance is a kind of a negative assurance wherein the assurance provider will state that subject matter plausible in the circumstances and gives a report in the form of a negative assurance. Whereas a reasonable assurance, the assurance provider gives a positive assurance. It's a typical between kind of when you kind of correlate that with an audit. When you do a limited review, you give a limited assurance, you provide a typical conclusion over the procedures that you have performed. Whereas when you go to a reasonable assurance, it's a kind of true and fair view, which is a year-end audit of the companies that the auditors are doing. Again, what we mean by sufficient, which is a common word between the limited assurance and a reasonable assurance. So sufficient refers to the quantity of evidences which the assurance provider obtains, and the evidence collected should be enough so that assurance provider can draw a conclusion or an opinion. So that's something which is important at this stage to understand what is the word sufficient talks about. Again, when we see a bit of comparison between limited versus reasonable assurance, limited assurance, yes, it's a least costly options as compared to a reasonable assurance. It reduces the time. There is a least involvement required from the assurance provider. Testing approach is again a bit of judgmental from the practitioner side, and again it's not as robust as a reasonable assurance opinion. Whereas if you see a reasonable assurance, it's as robust as audit of the financial statements. So when we audit a financial statement, we kind of perform a detailed risk assessment for each financial statement line item, design our audit approach starting from controls testing and a substantive testing, mix those up, get the comfort on various financial statements line items, including presentation and disclosure. Similarly, for reasonable assurance as well, the same things required to be performed on non-financial data and reported numbers. Again, it's a bit more costlier affair when the entities go for a reasonable assurance, and it requires additional resources and time both from the practitioner side as well and from the assurance provider side as well. Just to give a preliminary differences between reasonable and limited. So materiality, yes, materiality level remains same. There is no typical difference between materiality which are used for limited assurance vis-a-vis materiality which is used for a reasonable assurance engagements. Having said that, there is a bit of difference between understanding the underlying subject matter and engagement circumstances. In a limited assurance, sufficient to identify where the misstatement is likely to arise. So assurance provider will kind of draft an assurance procedures just to understand the process under which the data is being captured. It also considers the process to use to prepare the subject matter. Let's say the subject matter is, for example, scope 1 emissions. So assurance provider will go and understand the process to capture the data and do a limited level of testing to get the comfort for the purpose of limited assurance. Whereas if we move to a reasonable assurance, it is aimed to identify and assess the risk of material misstatement at a granular level, like what we audit the financial statement. It requires detailed understanding of the internal controls over the preparation of the subject matter, identifying various assertions, which we'll see up in next after a few slides, and also includes to assess whether the design of control is there or not, and the management has implemented proper control mechanism. If it's not implemented, then the substantive testing would kind of get increased, like we audit for the financial statement perspective. In terms of response to risk, the procedure can differ in terms of nature, timing, and extent in kind of limited assurance. So assurance provider will apply a judgment while determining nature, timing, and extent of procedures. But it's still a less extensive as which is there in the reasonable assurance. So in the reasonable assurance, yes, procedures are quite extensive in detail as compared to a limited assurance engagements. So that we have covered brief about the differences and various standards. Now let me move to BRSR core audit and CB circular. Yes, July 2023, a historical day in the sustainability regime, where SEBI has come up with a circular on notified BRSR core, and it includes 9 attributes for which the KPI are required to be published. Starting with, so what this circular says is that it requires a reasonable assurance for top 150 companies by market capitalization starting from financial year 23-24. So this year, yes, March 24, top 150 companies by market capitalization mandatorily needs to go for a reasonable assurance on BRSR core 9 indicators, which we'll see in next few slides. And again in a phased manner, starting from other top 250 companies from 2500 in 26, and later on 1000 companies by 27. In the phased manner, the assurance is mandated for them. Second item which was put up in this circular is the listed entity needs to kind of do an BRSR core stuff for their value chain partners. So that's something which is introduced in this circular. Again, it gives a bit of relaxation as it is based on comply or explain basis. Having said that, it's applicable for the financial year ending March 25, starting with top 250 companies, and again in a phased manner it increases to top 1000 companies for the purpose of value chain reporting. This circular also defines what is considered to be in the value chain. Currently, it comprises of 75% of purchases and sales by value that is required to be reported by top 250 listed companies. So even if your customers or suppliers are not listed, the companies need to identify and cover up at least 75% of purchases and sales by value for the purpose of value chain reporting. This circular also typically talks about the board needs to ensure that BRSR core assurance provider should have necessary expertise, proper credential for understanding reasonable assurance, and companies needs to make sure that there is no conflict of interest between the assurance provider and he should not do any non-audit work, which we'll see in next few slides. If we typically deep dive into BRSR core indicators, which requires for the purpose of assurance, it starts with scope 1 emission, which is bifurcated into GHG, into CO2, CH4, various type of gases typically to say. And now the accountant needs to learn how these gases are produced and how it impacts the ozone layer of the earth. So that's something one the accountant needs to understand, then and then only they can kind of do an assurance upon the same. So this is typically a non-financial indicator which the assurance provider needs to give an assurance upon. Scope 1 emissions. Typically, Scope 1 is the emissions from the organization's owned or controlled sources. So let's say a company has a coal-based plant, emissions generated in their own coal-based plant, that's something considered under Scope 1. Total scope 2 emissions, which is also again bifurcated into various gases. And typically, scope 2 is the indirect emissions from the generation of energy that is purchased from a utility company. So, let's say a company who is procuring power from the third party electricity utility provider that is used for the purpose of reporting under scope 2 category. Having said that, the GHG emission intensity is also required. So just do a total of scope 1, scope 2 emissions and divide that by total revenue from operations adjusted for from purchasing power parity. That's something, a mandatory indicator introduced in BRSR core, under which the assurance provider need to provide an assurance upon. And here in the intensity, the numerator remains non-financial, whereas the denominator, if you say, it remains the financial indicator. So to brought down total revenue, which is there disclosed as a part of financial data in the part of financial statements, and use that as a denominator for the purpose of calculation of intensity. This intensity remains common in a couple of other indicators as well. First is intensity based on total revenue and purchasing power parity, and second intensity is the total output of products or services. Next indicator is on water. It says about total water consumption, how much water that the entity has consumed, and its intensity. Second is water discharge. So whatever consumption done by the company and what water discharge that the entity has made. Again, these are typically non-financial indicators which are required to be assured. Third one is on waste. So entities needs to categorize the waste into categories given under BRSR format. Bifurcate between plastic waste, e-waste, biomedical waste, construction and demolition waste, battery, radioactive, etc., and do a total and again do a intensity computation of those waste. Again, it's a non-financial indicator. A lot of time it may happen that the assurance provider has to link this data with the financial set of information. Just to give you one example, construction and demolition waste, right? When we audit the financial statement, yes, we audit the fixed asset register, right? We do audit the repairs and maintenance expenses. From that, it may be possible that there are some expenses which are being booked in terms of construction of new plant. There would be a demolition of the old plant. There would be a repair and maintenance activity which been carried out. That's something which assurance provider needs to go and identify. If there are any indicators which kind of or any financial expenses booked, they need to correlate that whether the sufficient construction and demolition waste which is being reported under BRSR core indicator or not. So that's something correlation of non-financial data with the financial data and information which the assurance provider can do and perform over the same. Next indicator is on energy footprint. So it talks about total energy consumed in joules or any other multiple thereof. It also talks about percentage of energy consumed from renewable sources. And again, energy intensity. Intensity is just a total number divided by rupee turnover adjusted to purchasing power parity and product or services, as we have seen in the earlier side. So these are typically four indicators which are linked to environment, if we say, uh, energy, water, waste, and emission. These are typical four indicators which are there in BRSR core. Fifth one is, yes, related to a social indicator. Fifth and sixth are typically a social indicator, which starts with enhancing well-being and safety of employees. So that what are the spend the entity has made for the well-being of employees and workers as compared to total revenue of the company. So that's something, a bit of financial indicator comes into picture, because here the expenses required to be computed, audited, like we do an audit, do a sampling based approach, do a testing of a particular line item and identify if there are any misstatements or not, and divide that by total revenue of the company. Second is, yes, detail on safety related incidents, lost time injury frequency rate, number of permanent disabilities, number of fatalities. Again, this is typically a non-financial indicator which are required to be reported. Next is on enabling gender diversity in the business. So gross wages paid to female employees as a percentage of total wages paid. Again, this is a financial indicator. So you need to identify what are the salaries being paid to female employees as compared to total wages paid. Complain on POSH, which are kind of reported by the company, total complaints reported as compared to what's the percentage of female employees compared to workers. Complaints which are upheld. So that's something which are required to be reported under enabling gender diversity in the business. So as we said, first four are energy, environment related indicators. 5 and 6 are social related indicators. Typically 7, 8, 9 are generally governance related indicators, starting with fairness in engaging with the customers and supplier. So if there are instances noted in terms of data breach, which is required to be reported, again a non-financial indicator. Next is on number of days of accounts payable. So that's something, a ratio required to be computed, typically drawn from the signed financial statements of the company divided by total cost of goods or services produced. So that's something, a financial indicator, which would come under point number 7. 8 is again an openness of business. So it again typically talks about the concentration of purchases done with the trading houses, dealers, or related parties. So that's as compared to the total number which is being reported into the financial statement. So concentration of purchases, sales, plus loans and advances and investments with related parties. So this typically 8 number is altogether a financial indicator where the data is being reported along with the financial statement. So once financial statement audit completed, these numbers are being replicated in terms of computation of various percentages to arrive at the openness of business. 9 is enabling inclusive development. So that's something which is again a governance related indicator, which talks about input material sourced from as compared to from various MSMEs and all as compared to total purchases. So that's something which is required to promoting the stuff from the micro, small, medium enterprises as well as small producers. It also kind of gives one indicator in terms of job creation in smaller town, wages paid to people employed in smaller town. That's something which is required to be reported as compared to total wages. So this is again point number 9 is a financial indicator. So as you see, all 1 to 9, all points, it's a bifurcation between the financial and non-financial indicator. So the assurance provider needs to make sure that the team who works the activities that the assurance provider needs to do should have a sufficient knowledge both on financial side as well and non-financial statement side as well. So that's something, a mix one which is getting kind of deployed from the team side. Now, if we move to independence restrictions which are given under SEBI circular, so SEBI circular lays down overarching principles that should to avoid any conflict of interest with the assurance provider appointed for BRSR code. So, as a general rule, what they said is that if an assurance provider sells his products or services, any non-audit services or non-assurance services to a listed company or a group entity, irrespective of whether the nature of product is financial or non-financial, it will not be eligible to undertake assurance of BRSR code. So this is a general rule given under the SEBI circular, which typically restrict the assurance provider to perform any non-audit work in the client where they undertake the responsibility to do an assurance on BRSR code. Having said that, SEBI has also issued an FAQs, which typically provides an activities which are allowed to be undertaken, starting with third-party certification, tax audit, system audit, tax filing. Those are typically permissible under the SEBI circular and can be undertaken by assurance provider of the BRSR core of a listed entity. Circular also categorically provide the activities which are not to be undertaken, kind of a risk management, project management, management consultancy services, investment advisory, design and implementation of information system, actuarial services, accounting, bookkeeping services. So if you are providing any of these services, you cannot do assurance on BRSR code. Again, CBS said that this is not an exhaustive list. So the assurance provider needs to do a proper care and review before they undertake any assurance engagement of any clients. Having said that, it also provides a boundary for the entity under which this restriction on independence will apply. So yes, it's first entity, reporting entity. It also includes group entities, which includes the holding company, subsidiaries, associate, joint venture. So let's say if you are providing any non-audit work to an associate or joint venture of the listed entities, you cannot undertake BRSR core assurance engagements for the listed entities, specifically on the if there are any conflict of interest getting noted from an independent side. There are other extract which are there from FAQ which are given by this or clarified to that extent by SEBI. Can a statutory auditor of a listed entity be appointed as an assurance provider for BRSR code? They stated yes, statutory auditor can provide an assurance on BRSR code. It also from an internal audit side. So can internal auditor of a listed entity can do an assurance on BRSR code? Circular itself says no, internal auditor of a listed entity cannot be appointed as a BRSR core assurance provider because it's kind of creating a conflict of interest, and internal audit is typically management related services. Circular also provides the clarification on our assurance standards. So the question is asked on which assurance standard should be followed by the assurance provider. Typically, circular does not mandate or recommend any specific standard. It clarifies that the assurance provider can use ISA 3000 3410, which is issued by AASB, or they can use the standard issued by Institute of Chartered Accountants of India, which is SSA 3000 or 3410. So both standards can be used. SEBI has provided that flexibility to the assurance provider. Next, what we'll do, we'll move or do a deep dive into assurance approach and assurance methodology to start with. So again, this steps more or less in line with the way we perform audit of the financial statements or any other stuff. It's typically kind of start with planning and scoping. So first you kind of define the scope of assurance, get the clarity on the scope of assurance, what are the things required to be disclosed, then identify what you have a confidence level, what you wanted to achieve. If you wanted to go for a limited assurance, the confidence level may be different vis-a-vis when you wanted to have a reasonable assurance, the confidence level will be different. So that is something required to be decided at the planning and scoping stage itself. Next steps is do an initial risk assessment. So identify factors such as subjectivity, materiality, what is the risk of fraud or error, which is inbuilt into build that into your assurance plan. It also kind of talks about brings subject matter expert in the assurance engagements, BRSR core assurance engagement, be it for the discussing carbon offsetting or biodiversity. Those are typical topics when the assurance provider needs to decide whether they wanted to bring any assurance experts, so the subject matter experts on specific topics on that or not. Second step is the process assessment and a criteria review. So it's quite important for the assurance provider to understand and do an evaluation of the reporting system, whether the controls exist or not in terms of reporting of various non-financial indicators which are subject matter for assurance. Do a key conversation within the engagement team, do a conversation with the management as well. Again, perform walkthrough, understand the relevant reporting systems, processes, and controls. That's how typically we do an internal control audit. Similarly, this also it's important to understand, perform walkthrough, understand the relevant process which the management has established to capture various non-financial financial information for the purpose of sustainability assurance. Third step is on yes, executing the engagement, identify what are the procedures that the assurance provider wanted to establish, validate that with the subject matter against the criteria. So let's say subject matter is yes, emissions, identify what are the criteria. Yes, if it's a BRSR core, if it's a GRI assurance, based on that determine what's the level of assurance that is required. Assess the completeness and accuracy of the data, whether the data which is provided by the management, how you will ensure the completeness, whether all 12 months data is being provided by the company or not, all the reporting boundaries are considered or not. That's something that the assurance provider needs to decide while executing the engagement. Also understand which areas were judgments involved. Yes, there may be a possibility that some areas management may not have an information, and they would have done some level of estimations in terms of providing the data. For example, fugitive emissions, where the companies are making estimates, refrigerant or fire extinguisher, which are typical of fugitive emissions, where company may or may not have a proper data recording, and they are doing some assumption estimates. So as an assurance provider, need to identify what's the robustness of those estimates and assumptions which are being used for the purpose of for designing proper procedures on the same, and understand the process, whether the process are being followed or not. So in the second step, you understand the process, perform a walkthrough, and the third step, you kind of do actual testing of those processes which are being followed or not by way of various sampling methodologies. And last but not the least tab is reporting and deliverables. So a wide range of deliverables throughout the process. They need to do a well-designed plan, to do a right strategy, identify what's the scope of assurance, and deliver based on the scope. Also issue an interim management report, so as that if there are any circumstances where the assurance provider identify the control lapses, that can be kind of mitigated by alternative control if it's there set up by the management, and do a final reporting to allow the communicate to those charged with governance, and issue an assurance report. That's something which is typically a last step in the assurance process. So, having said that, these are typical building blocks for an assurance engagement, starting with the planning, initial process understanding, execution of the engagement, and last but not least is reporting and deliverables of assurances. Now, let me move to some of the preconditions for sustainability assurance engagements. Again, it starts with understanding the entity and its process. So that's some of the preconditions. Quite important for the assurance provider to understand why the entity is kind of going for an assurance. Is it mandated by regulation? Is it voluntary assurance that the company wanted to do? Is it some requirement from the investor under which the assurance provider, under which the companies are going for an assurance? What's the underlying purpose here, and who would be the intended user, whether the report or whether the outcome of assurance provider used within the management, whether it will be published on the website, whether if it intended for the purpose of investors kind of to demonstrate the company's sustainability initiative. So that's something an important and a precondition for the assurance provider to understand the usage of assurance report. It will help in kind of doing a proper decision making, designing the appropriate assurance procedures over the same, and also kind of identify that the criteria are suitable for the circumstances of the engagement. So that's the first and foremost precondition for any sustainability assurance engagement. Second one is understand the appropriateness of the subject matter. So identify the whether such subject matter is appropriate or not, whether it's identifiable, whether it's measured appropriately by the management, and you as an assurance provider, you will be able to get sufficient appropriate audit evidences to support reasonable or limited assurance conclusions as appropriate. So that's something an important for the assurance provider to identify. Here in this case, let me take one example. Let's say a client comes for an assurance, and they would have 10 plants, but while setting up an assurance reporting boundary, they would go and kind of discuss with assurance provider that they would wanted to go for only 5 plants for the purpose of reporting. So as an assurance provider, you need to go and ask questions: what are the reason behind excluding other 5 plants from the assurance reporting boundary? What could be the reason? Is that something where the company do not have a data, they have not start collating those data for other plants, or is that something, some reasons like those plants are doing a higher level of emissions, and that's why they wanted to exclude at this stage, and they want to demonstrate something which they are doing good only for those plants. So that's something assurance provider needs to understand by way of a detailed discussions with the management, and understand whether the subject matter which is being reported are appropriate or not. Another example which we can take, let's say for an example, IT company. So for an IT company, if you see a material topic per se, yes, gender diversity may be material topic for them rather than the level of emissions. So yes, level of emission is also one of the important topic, but for IT company, the gender diversity, cybersecurity risk would remain at the top notch in overall materiality assessment. So when the assurance provider work for or assurance provider do an assurance, they need to make sure that yes, they capture the relevant material topics for the purpose of reporting. Next is on suitability of the criteria. So bifurcate criteria between relevance, completeness, reliability, neutrality, and understandability. That's something the assurance provider needs to do. Evidence availability, so whether the assurance provider has an access to evidences, quality and quantity of evidences, that's something preconditions. Access to data and records, whether the assurance provider access to all data and information required for the subject matter of information. Would they need any additional information, and they would be requiring unrestricted access to the person for obtaining evidences. So these are typical four preconditions. Having said others are roles and responsibilities of appropriate parties, changes in the criteria, whether any restatement required in the previous year or not, whether the criteria are available for the intended users of the assurance report, engagement scoping and rational of purpose. So these are something that the assurance provider needs to identify at the engaging the entity stage, and once they will identify, then and then only they can go for a detailed assurance procedure, design the appropriate sufficient procedure so as to get the comfort on various indicators, be it for the purpose of reasonable assurance or for the purpose of limited assurances. Next topic is yes on materiality. Financial statement, yes, we do have a detailed guidance, detailed standards on auditing, which defines how to compute materiality, provide example. So just to kind of take that guidance, carve out for a sustainability assurance engagement. What it says is that misstatement includes omissions which are considered material if they individually or in aggregate could reasonably be expected to influence the relevant decision of the intended user. So let's say, for example, I am an intended user for an assurance report. What would be material for me? Yes, emissions would be material for me, and if the number of emissions or the data being reported for emission is misstated by 10%, yes, it would impact my decision as a intended user. So that's something which is considered as a misstatement, which the assurance provider needs to kind of understand and use that for the purpose of identifying sampling procedures and other stuff. Again, there are two types of materiality that the assurance provider can use. One would be a numerical subject matter. Let's say, for example, scope 1 emissions, scope 2 emissions. Those are typically numerical subject matter information. So, on that, the assurance provider needs to establish quantitative materiality measurement for the purpose of identifying and assessing risk of material misstatement in those numbers. So let's say, for example, scope 1, scope 2 emissions, well-being employee, what are the spend being made. Those are typical numerical subject matter. Materiality also required to be determined for non-numerical, so as to say qualitative subject matter, and for that the assurance provider needs to kind of perform testing over qualitative statement, so whether the statements are in line with the requirement which are given under the respective standard. So these are typical kind of determination that the assurance provider has to make between the numerical subject matter vis-a-vis non-numerical subject matter. Let's see some of the examples of materiality. So while the appropriate component or metric that the assurance provider will determine, it will again based on assurance provider's judgment, and also depends on the specific subject matter. Let's say for a greenhouse gas emissions, you will have a gross emission number reported. That something can be used as a benchmark. Also emissions, scope 1 emissions, scope 2 emission, that is something can be used as a benchmark. Emissions by jurisdiction also, so geography under which the entity operates or by source. That is something can be considered as an appropriate benchmark. So again, assurance provider needs to apply judgment on which benchmark that they wanted to use for the purpose of computation of materiality. Second is again waste. So waste by type, for example, effluent, sewage, or hazardous, non-hazardous waste. That's something that the assurance provider needs to determine. Or what they wanted to consider by source. So waste from production, food waste, by which sources it is being generated, or waste by disposal stream, whether it's being gone for landfill or incineration, or it's being recycled. That's something that the assurance provider needs to understand and then determine materiality for the purpose of waste. Similarly, for water, usage of by water type or by sources, for community investment by investment type or project type, on health and safety, number of workers related injuries, reported incidents. That's something that the assurance provider needs to understand and identify materiality for the various subject matter which are for the purpose of assurance. Now let's move to what we call assertion. Yes, those who have kind of cleared the CA exams, they would know this by heart. But let me kind of, for the sake of the this session, let me repeat some of the stuff. What is called assertion? So assertions are representations by the entity, explicit or otherwise, that are embodied in the report, as used by the practitioner to consider the different type of potential misstatement that may occur. So these are typical assertion in yes audit. Also, we do kind of assess whether these assertions are appropriate or not. Starting with accuracy. So first, which is first and foremost assertion, where the amount and other information have been recorded appropriately or not. That is something that the assurance provider will kind of do a testing upon. On the completeness side, all data which is underlying subject matter should have been recorded. Let's say, for example, for the purpose of scope 2 emissions, you will have electricity bills. Whether all 12 months of electricity bills are covered for the purpose of reporting or not, that is called the completeness. Instead of 12 months, if entities has reported only for 11 months, there would be a gap between what required from an assurance provider, and there would be a kind of completeness assertion will not get met. Whereas if there is a computation error, that will kind of draw attention to an accuracy assertion. So these are typical accuracy and completeness. Cutoff, what typically talks about is the subject matter information has been recorded in the correct period or not. Let's say, for example, emissions or electricity bill of the month of March should be reported or should be kind of computed for the purpose of March reporting and not being reported in the month of April. That's something which is a cutoff at the closing period and that the entity will determine. And occurrence and responsibility. So underlying subject matter exists or have occurred pertains to a reporting entity. Last but not least assertion is the presentation and disclosure. So whether the numbers which are being reported is the correct amount, correct kind of classified appropriately. As we have seen in earlier slide, for example, waste is bifurcated into various categories like plastic waste, hazardous, non-hazardous, construction demolition waste, e-waste, etc. So as an assurance provider needs to understand that whether it's categorized properly or not, though the total number will not change. But having said that, the classification between plastic waste, hazardous, non-hazardous, or e-waste is appropriate or not, that's something the assurance provider needs to make sure while kind of assessing the presentation and disclosures assertion while they will take the comfort of. Let me take kind of some of the examples. What is the risk and how it is linked to any of the assertions? So first and foremost is the risk that all relevant information is not included in the reporting metrics. For example, let's say the reporting boundary is 10 plants, but for a particular indicator, only 8 plant data is being reported by the company. So those 2 plant which are left out, that's the completeness related issue. So we can say that the subject matter, which is maybe an emission or any other matter, for those 2 locations are not included. It's a completeness related assertion which is getting missed. Second risk is methodology or criteria for measurement of the reported metrics are not consistently applied. For example, uh, whatever emission factor that the company should use, instead of using GHG emission factor, they have used applied some different methodology to compute, and that's something that the assurance provider will go and check, which typically kind of gives the comfort on accuracy, occurrence, and responsibility assertion. Third is on data used to calculate the estimates are not complete or accurate. That gives a comfort on completeness as well as accuracy. Next is on calculation of supporting the reported elements are not mathematically accurate. So yes, that will give a comfort on accuracy assertion. If there is an unauthorized access to the systems and spreadsheet used to prepare the sustainability on information, which is impacting all assertions. So it's an pervasive risk that the entity has, and the assurance provider needs to make sure that they will design sufficient appropriate audit procedure to cover up that risk. Next is on data used to calculate emissions or information which is relevant for the period which is not being captured, which is typically a cutoff related assertion, and a definition on organizational boundary which is not being reported, comparative numbers are not being reported appropriately. That's something impacting the presentation and disclosure assertions. So this is how the entity will determine what is the risk, whether assurance provider will understand what is the risk, how they can design sufficient appropriate procedures to make sure that the relevant assertions are being fulfilled, requirement of relevant assertions are being fulfilled, and it's free from material misstatement. That's what we call in the audit language, audit parlance per se. Let's look about controls a bit, and then we'll move to a substantive test of our details. So it's again a well-written control which is being developed by the company or maybe internal auditor assisted company in developing the control. As an assurance provider, when we go for limited or reasonable assurance, we do an understanding of the process and do a detailed walkthrough as well of the process. It's quite important for the assurance provider to understand how the control activity which is being determined by the entity, who is doing, who is performing, who is approving the control, what kind of activity which are being performed, when the control is getting operated, what's the frequency, whether it's a monthly, weekly, quarterly, or throughout the year the control is being operated, where the evidences are being kept, whether it's within the email box, is there a central repository where the evidences are made, why is the control performed, what's the objective, why the entity, why this control is being placed, and how is the control is executed. So that's something called about the control procedure. So these are typically who, what, when, where, why, how questions which are being determined while the assurance provider evaluate the control activity for the purpose of assurance engagements. Types of control, yes, as we understand, for the purpose of audit there are two types of control. One is preventive control, another is detective control. So these are typical internal control type. Preventive control typically kind of stops the organization for any error or fraud risk before it occurs. For example, gas and electricity meters are calibrated on regular basis. So calibration certificates that the assurance providers see and make sure that as a part of control, the company has a control which is documented. Typically, it talks about whether the meters are being calibrated on a regular basis or not, and someone is preparing, someone is reviewing those calibration certificates. That's something called a preventive control. Next is on detective control. So that typically talks about design to identify and correct the error after occurrence. So sometimes the errors occur during that month, but due to month-end activities being captured. Typical example which we can say is that water reporting by specialist, he will do a year on year review, and in that year on year review if there is a variation which is more than 5%, they will do an investigate. So that's something considered as a detective control. So here, yes, internal control two types, preventive, detective. Let's move to control activity type. So it's specifically bifurcated into three parts, starting with automated controls and its calculations, or control or calculation performed by an IT system or in software driven control, which is typically considered as an automated control. typically the system computes from scope 1 emissions to energy consumption data by using emission factor, and those factors are being reviewed. That is typically an automated control which is being placed by the company. Next is on manual control. So control that is performed by a human and does not rely on the system or application, that is considered as manual control. Something kind of a review which CFO or a sustainability head is doing for various non-financial reporting is considered as a manual control. Third is IT dependent manual control. So a control that is performed by a human and does and by relying on the system. So that is something human is relying on some system and performing the control, that is considered as IT dependent manual control. So it's quite important for the assurance provider just to understand the process, do a appropriate walkthrough, understand whether the company has implemented any automated control, manual control, or IT dependent manual control before they kind of design sufficient appropriate assurance procedures over the same. These are typical common questions that the assurance provider should ask before kind of engaging to the company. What is the reporting boundary, whether it's clearly identified, whether it's a standalone entity or a consolidated entity, whether all relevant businesses are covered, not covered, all offices are covered for the purpose of reporting or not. That's something the first and foremost question. What framework that the company wanted to use, whether it's a BRSR, reasonable assurance that the company need, or a GRI, or a requirement by any other standards or framework that the company wanted to use. What are the indicators required for the assurance, qualitative indicators or a quantitative indicator? That's something required to be determined. What's the method of consolidation of data? Let's say company has a 10 plants, but consolidation happening manually, or each plant will apply different factors for the purpose of computation. So method of consolidation is also important for the assurance provider to understand and apply the same before designing any assurance procedure. What systems that the company uses? Is there any IT environment which is being set up to capture and collate the data? Is there a preparer reviewer which is there in the organization to capture or review those data? Are there any controls which are being established to cover non-financial indicators? Are there any future-oriented information which are subject matter of assurance? So that's something that assurance provider needs to assess. One most important point is that whether the internal audit function also captures while determining the scope of internal audit, whether the scope also cover the sustainability related data, whether it's designed properly, whether it's documented in the internal audit scope or not, whether the comparative period presented in the integrated report or sustainability report, whether they have done assurance in the earlier or not. That's something that the assurance provider will determine, and whether any third party involved in terms of preparation of data. So these are typical common questions which the assurance provider will go and ask. And again, it's not an exhaustive list. One needs to go through ISA 3000 revised and ISA 3410 to kind of determine what are the things that are required to be asked by the assurance provider to the client. Typical observations in the sustainability related assurance engagement, first and foremost, is alignment of reporting boundary. So yes, it's quite important that the boundary used for the purpose of reporting should be consistently used. For example, let's say for environment related indicators, company are using the plant related data, but let's say for example, if there is a employee well-being, they use only head office related data and exclude the plant related data. So assurance provider needs to kind of make sure that the reporting boundary should be used consistently throughout the report. Next challenge is in terms of completeness and accuracy of the source data. For example, the sources, all GHG emissions are covered or not. As we have discussed, fugitive emissions like fire extinguisher, refrigerant, most of the time got missed for the purpose of reporting. Sources of water withdrawal are being captured or not. That's something the complete will create a challenge in getting comfort over completeness and accuracy of the data. Another is cutoff, whether all 12 months data are being captured or not. A lot of time it may happen that the last month invoice costs, let's say for example, electricity bill is getting booked in the provisions rather than the actual expenses. So there may be higher chances that it got missed for the purpose of reporting. For having said that, yes, it is required to be reported. All 12 months data are required to be identified and required to be reported for the purpose of assurance engagements. Estimation, extrapolation, and gap filling methodology. So this is something, an activity required to be carried out by the client, and auditor or assurance provider needs to understand what are the estimates being taken by the management for the purpose of reporting. Emissions or conversion factor. So that is something that the assurance provider needs to understand whether the emission factor being used are relevant for relevant subject matter or not. If there are inconsistencies in the emission factor or not. We have noted in some of the instances where, let's say, conversion factors are used differently by different plants. Having said that, company has to use a single emission factor. If the type of emissions remains the same, they should use a single emission factor. So these are some of the inconsistencies which you observe in typical sustainability assurance engagements. There may be a calculation errors because level of understanding at different plant would be different. There may be possibility of calculation errors. Also, there would be a lack of process inconsistency across the site. Sometimes some sites or plants would be reported some numbers and other plant would be reported in different manner, because there is a lack of understanding on the typical subject matter, and it may be possible. Having said that, assurance provider needs to make sure that the information should be consistent across all the locations. Initially at this stage, manual data being recorded, and there is a huge opportunity in terms of transiting this manual data to some sort of ERP, which are typically used for the financial statement reporting. And similar ERP can be used, or management would kind of develop a new system of reporting of non-financial data and information. Also, lack of monitoring control, since it's an initial year evolving field, where we say financial statement audit is happening more than 100 years, whereas non-financial audit started in last 2-3 years down the line, and directly we are jumping to a reasonable assurance. So that's something that pushes management to develop proper control mechanism, control framework, so as to make sure that data being reported by the company in their annual reports are proper, accurate, complete, and there would be no kind of misstatements from the management side. And assurance provider needs to kind of do a detailed deep dive into whether the numbers being reported are appropriate or not before providing an assurance opinion on the same. So having said that, we looked into what are the standards and framework, just to kind of summarize the conversation. Standards and framework which are being used, a bit of difference between limited and reasonable assurances. Also done a deep dive into what are the 9 indicators which are there for the purpose of assurance. Do a bit of an understanding on independence parameters, and then jump to an typical an assurance process, 4-step approach of an assurance process. What are the do's and don'ts type of stuff? What are the preconditions for a sustainability assurance engagement? And typical kind of a bifurcation between how to do a control testing, what are the types of controls that the assurance provider kind of do an understanding upon, and concluded with the common observations in sustainability related assurance engagements. So with this, I'll kind of give it back to Anil Kumar ji and Rika ji for any open up for any questions on sustainability assurance.
Chirag ji, Anil sir, please start the proceedings of question answer session.
Please.
Anil sir, you are there? Anil sir? Anil sir, you are there? Please start the question answer session. Rika madam, you are there?
Yes, sir.
Please start the question answer session, madam.
So we have received quite a few questions on this. Yeah. So the first question was if the speakers could throw some light on specific reports, quality-based reports, which the audience can go through on a global basis for ESG purpose. Examples like Microsoft, I think they have this ESG reporting. Maybe, sir, Hirak, sir, you can give some examples.
Yeah, so first of all, the thank you for the question. Having said that, someone needs to first understand the reporting framework, whether the reports are integrated report or a sustainability report or a BRSR. So different types of reports available. Even if you see, let's say Indian market, just to kind of give an example, if you wanted to see or learn a bit more about what's called integrated report, what called GRI standards, you can very well go to Tata Steel, Tata Motors, Hindalco, top B NSE 50 clients. Just Google out and see their integrated report, how it's being reported. A lot of those clients are being kind of assured not only this year but past 3-4 years as well. Just to kind of go and see how it appears in terms of the framework being used, the reporting standard being used, and so on and so forth. Yeah, thank you.
Absolutely. Thank you, sir. The second question was for Shailesh, sir, specifically for you. Since you kicked off the session, what is the starting point or the initiation to get on hands on the training of ESG, and what all certifications can be acquired to meet that global talent requirements?
No, great question. Thanks, Riga, and thanks again for the opportunity to be here. And Hira, great presentation, man. Thank you. I didn't go anywhere, so that shows it was good. Look, it all comes down to your professional background, right? Let's apply a commonsensical approach where if I'm an engineer, I really need to understand the audit procedures, right? Go through training. I remember as an engineer, I'm a member of CANZ, right? So how you really look into understanding the audit procedures, understanding A1000, right? Understanding ISA 3000. And you can only do it while conducting the audits. So two aspects, right? Now for CAs, that's the question coming from, right? CAs need to really understand reporting frameworks, reporting standards, right? Once you understand the reporting standards, like one would be Global Reporting Initiative Standard, GRI. Good to understand. I call it the Bible. So have been really being involved in GRI launches over the years, right? From day one until now, how you really understand that. Second, when I studied the definition of John Elkington, and he was on board of a company where I worked as well, he came up with this definition of sustainability when I was a student, and I was talking to him. He said, no, it's no longer valid, right? So now it's different. It has changed. If you check ISSB definition, it's not what I studied at the uni. So you need to really understand that's an evolving field. So just doing one standard or framework and doing a course may not help. But 5 things, absolutely: GRI, BRSR, absolutely, it's good idea. TCFT, right? It's good to do that because there's climate risk, physical assets, physical risk, transition risk, and all. These 3 kind of frameworks, some idea of rating agencies absolutely will help, right? And also a little around global regulation. For example, that are relevant for India. I've covered quite a few of them, right? So imagine a company exporting to Europe and all that. So I think if that mindset, that will work well. But basically doing something, building on your audit capability and building on top of that. In fact, also what Hirak explained, when people look at the reports, right, just to add to the earlier question, go sector-wise. Where you have most interest, the leaders in those sectors, look at global, look at local, and look at both. Because why? I call it pockets of excellence. I don't use the word peers anymore. You will understand pockets of excellence, and then that will be great for you. But over to you. Thanks, Rika.
Thank you, sir. I feel that the foundation of ESG was already there, but now with regulatory enforcement, this has become more meaningful in our lives as an auditor. The next question is, how can auditors avoid greenwashing? And given that estimation uncertainty is involved in this process, this would require huge reliance on specialists. So, would this mean that reporting would be huge dependent on the specialist work?
Yeah, so let me start to answer this, and maybe Shailesh, you can add up based on the needs. So, As you see, starting with BRSR core, there are a lot of stuff which bifurcated into financial and non-financial. Having said that, yes, chartered accountant have knowledge on how to do an audit, but in these cases, detailed understanding of the subject matter is required. So, without support of environment engineers or social experts, it's difficult for the chartered accountant to design audit procedures. So, that's something of first and foremost step where you involve any expert. Let's say, for example, in any client where fraud instances occur, you will go and involve forensics, as it is as good as when you go and do an audit of any non-financial information. You have to involve experts, be it from environment background, social background, or any expert that you would need. So that's something considered as a foundation. In terms of percentages, let's say for example, how much involvement required, yes, audit would be substantial, 60-65%. Having said that, sustainability experts also needed, not at least less than 25%. Again, it depends upon the maturity of the client, the level of assurance that would be required, the level of reporting that is being made. That's something required, and based on that, the team would be built in for to do any assurance on BRSR audits or any other assurance audit. Yeah.
Yeah, no, great. No, thanks, Eric. The only thing I'll add, first understanding what greenwashing is, right? Greenwashing legally is about misrepresentation of an environmental impact, right? And you're looking at benefit to a product, service, or investment, right? And normally then think about the regulatory agencies which monitor it, which capture it, we look into it. In Australia, I remember it's Australian Competition and Consumer Commission, right? They look into it. The second thing you need to look at what really constitutes sector-wise, what constitutes greenwashing, right? I'm not even talking about vague terms like green and sustainable, right? I mean, Hirak, you covered it so well, how you describe these, but think about environmental strategies, right? In fact, I know Greenpeace criticized a lot of these net zero claims as well by companies, right? So how you they look into that? And then finally, when I look at it's about vague claims, unqualified claims, I remember some of it when I read, because I read, honestly, as people read novels, I read sustainability reports, right? This is what I have done. Either I can drive an Uber, I think Hira can do financial audits. I can only do sustainability, or I can drive an Uber. So sometimes I read reports and I say, there's a lack of substantiated information. They can't possibly substantiate this, right? Sometimes I see absolute claims, I see they have compared, use of comparisons, and there's nothing behind it. I've even seen companies omitting relevant information, right? So the benefit is kind of exaggerated and then there's nothing backing it up. So these are the kind of things I have seen. Sometimes what companies need to be careful, don't come up with these aspirational claims, right? With BRSR, I saw your as well as forward-looking indices, right here. So it's not something you just talk about what you have done. Talk about how these goals will be achieved. Don't talk about this is my goal, right? Sometimes I see these third-party certification. Just, okay, look at this. Who has certified? Who are they? Are they the relevant body? You even see some images sometimes where it looks like trust marks, So lot I can go about it. So, but please, guys, please understand their bodies like ACCC in Australia and other countries already watching this. Sector-wise, in the packaging and electronic sector, I see sometimes these things. Not in India, not globally. I'm not saying one country, but I'm saying in these sectors, I see these claims. But look, you look at anything. You look at vehicle example I gave, energy example. You talk about cosmetics and personal care, F&B. I see these things where companies just needs to be a little bit take a step back and think about it. That's it. The intent may be right, but we have to be careful. Yeah.
Thank you, sir. Next question. Is there any repository of checklist or documentation on ESG assurance for reference, which we can refer while performing documentation procedures? Like we have a guidance note on ICOFAR or for Schedule 3 or for CARA reporting as well.
Yeah. So right now there is no specific set of checklist which is available. Institute has already issued a BRSR guidance note, guidance type, but it's more of a preparation kind of a guidance note, which typically talks about what kind of data points that are required to be filled up. Having said that, as Shailesh said earlier, globally there is a kind of development of sustainability specific standard which is under development. So parallelly, maybe in ICI or as Sustainability Standard Board also kind of under discussion on specifically sustainability related standards which are required to be developed for India specific reporting or not. And though we are using the ISA 3000 and 3410 or SSA 3000, along with that using the guidance note on certificates and reports issued by ICI. So it's a kind of a mix that we are using for the purpose of reporting. But right now there is no specific checklist which is easily available, and it's area of developing. So I kind of when you go and do a deep dive into any sustainability assurance engagement, you see a lot of varieties, a lot of things which are kind of applicable to a particular sector or a company. The another company or another sector, there may be another set of requirement which are being kind of captured. So audit is quite required to be tailored particularly to a particular sector or a particular plant that is being kind of audited for the purpose of.
I think, Hirak, only thing I'll add, what you can do on the US, I was just looking at, sometimes I go to Deloitte University, Hirak, so I remember someone mentioned then, a couple of years ago, the Center of Audit Quality came up with this roadmap, right? So plenty of these, as Hirak explained, is available. India, it's not there, absolutely. It's coming. It will come. I'm sure Dr. Singhal will bring it.
Maybe with widespread implementation, when we have, because it is just now implemented for 150 companies, maybe in another year down the line, we will have guidance note or checklist documentation available with us. Okay. So the last question for the day is, how will our aggregation risk be affected in case the processes are decentralized across locations? Like, do we need to perform procedures at multi-location to ensure consistency of the information obtained? Hello, am I audible?
We can hear you. Please carry on. अनिल जी आप म्यूट पे जाएं,
The
शायद
question.
बैकग्राउंड नॉइज आ रही है. Yeah, carry on, please. Yeah.
So the question was, I'll just repeat once again. How will our aggregation risk be affected in case the processes are decentralized, like waste management process or energy generation or energy resource utilization process? These are decentralized across locations. Do we need to perform the procedures at multi-locations to ensure consistency of the information obtained?
Yeah, so let me try to answer this question. Yes, aggregation risk will be there if the processes are decentralized. As an assurance provider, the first step is to understand, right? We will go and do a detailed understanding of the process just to see whether the process applied to a different locations are homogeneous or not. If those are homogeneous, you can determine whether you wanted to select some of the plants and do a checking on consolidation. But when do that assessment, if you the homogeneity test is failed, you need to do a testing at a desegregated level. So the aggregation risk would be higher in that case where the homogeneity is not there. So this is something akin to a financial statement when you do audit at a FSLI level or a desegregated level at a plant level. So that's something linked to the financial statements audit.
Also the
Similar to-
parameter, right, Hirak? Depending on the parameter as well. And yeah, but honestly, you covered it. Yeah, nothing to add. Absolutely. Yeah.
Thank you, Shailesh sir and Hirak sir, for an insightful session. We covered a lot of information on independence matters, on the parameters to be covered, and limited assurance versus reasonable assurance wherever to be obtained.
हैंड में जाएगा, नीचे जाएगा, चलिए आई.
Sorry for the disturbance.
Thank you very much.
Can you hear me? Thank you so much, sir. Thank you so much, Hirak sir. Thank you so much, Shailesh sir, for wonderful deliberation. Both of you have done justification with the deliberation, and it was the wonderful deliberation. You have covered all the aspects, and thank you so much from the core of my heart. Whenever I called Shailesh sir, you always give me yes, yes.
आपका व्यवहार है सर, आपका व्यवहार है, आपको मना नहीं कर सकते. That's all it is.
So much, Shailesh. Thank you so much, Hirak ji, for such a wonderful deliberation and giving your kind consent. I also thanks both the moderators of today's webinar, Anil ji and Madam Riga ji,
Thank
for
you very
wonderful
much for
coordination.
giving us the
Thank you so much,
opportunity.
Shailesh. Thank you so much, Hirak ji. Thank you so much. Thank you.
It's my
Thank you
pleasure.
for the
Thank
great
you.
Thank you.
opportunity.
Thanks so much.
Thank you.
Thank you.
Bye.